Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, and we are inside 1 minute before the market closes. In fact, it's about 45 seconds. Looking at DIA, you can see that we have a green candle, but look down below. Drop in volume is bearish. A drop in volume on the way up tells us that the sellers are losing momentum. And with that loss in momentum, you can see that the stochastic down here is starting to hinge lower. And so my downside target on DIA is still in place at 425.51. We're not moving that. I will have some comments at the end about silver and the US dollar, so stand by. Looking at IWM, you can see that we are pivoting down from that 20-period moving average. And there you have it. The bell is now officially closing the markets on this Wednesday, February 19th. Remember, tonight from 6 to 7, we have the rapid fire stock analysis session where I go over at least 50 stocks and analyze those with price targets to boot. So if you want to enroll in that, you can. I'll give you more information at the very end here. So again, the price in IWM is pulling back. It's pivoting with a lower high, lower low. You can see that as I magnify that. And therefore, the 20-period moving average is acting as resistance. Down below, we still have an open gap down here. You see that? So my downside target for IWM is still in place at 220.23. So that's IWM. Looking at the Qs, this is a tech sector, QQQ. As I expand that, you can see down below, we have a full-fledged pivot on the CCI, my most favorite oscillating index, by the way. And we do have a pivot on the stochastic. Now that pivot is pulling back from one of the highest readings we've had all year on the stochastic, and therefore that is bearish as well. Now we do not have a full-fledged pivot point at the high right there. That's the resistance from the high back here in January, but we do have a spinning top right there. Now spinning tops generally show up at pivot points. You can see a spinning top right there. You can see a spinning top at the bottom right here. There's another spinning top, and you see those all at pivot points. Now that is a sign of indecision, and those signs of indecision generally show up at the end of up or down legs. So here we are at the end of an up leg, and this is also an ABCD pattern, with this being the higher D. Now, once that price starts pivoting lower, you could put an A at the top, and then we would expect a zigzag pattern to form with B at the pivot point here, then a C. Once it starts pivoting lower from C, we would expect a lower D, and that's pretty much where we're looking at on an ABCD pattern. It's to hit those downside targets down there. We're basically stuck in a trading range. You can see this red dotted line. Again, as I magnify this, that line has been tested a couple of times, and we have this resistance top. So you've got the resistance high with the support level down here, and this is what's known as the trading range, okay, or a trading channel. They're one and the same. So keep your eye on that next pivot point. I think we could see that tomorrow, actually. And once we start to pivot, you'll see that the volume will most likely start to accelerate, and so will the oscillators accelerate to the downside. Looking at SPY, which is the S&P 500 ETF, pretty much the same story. We got the pivots down here on the CCI, pivots on the stochastic. We have a wide divergence from that moving average right there that's known as the rubber band effect. So we are expecting the price to at least start moving back to that 20-period moving average. And I still have a downside target in place right down here with that red dotted line showing $590.63. Now moving on to the VIX, and then I'll talk about the dollar and gold and silver. You can see down below that we have an inverted hammer on the VIX. An inverted hammer is bullish. It's found at the end of a downward leg. It is more or less the opposite of a shooting star. A shooting star is what you see back here, long shadow on top at the end of an up leg. When you see the long shadow on top at the end of a down leg, that's more bullish. And so it's very easy to identify once you learn what the candle looks like and how it's defined. So keep your eye on the VIX moving higher. I still have an upside target, pretty aggressive target, I might add, up there at around 27. I do believe that we will eventually hit that $27 level. Let's talk a little bit about the dollar. The US dollar is in its own ABCD pattern, but I want to show you what it looks like on the weekly. And look at that. We're flirting with the 20-week moving average. And if I go back one more step to the monthly chart, you'll see that there's long shadows on top here, and the oscillators are pivoting lower for the US dollar. What does that have to do with silver and or gold? Well, if you look at history, you'll know that when the dollar goes down, the precious metals have been going higher. And so I am looking to buy more silver. I have a price target down below. I will let everyone know on my X page when I'm back in and buying. I usually give the general audience 5 minutes or so ahead of me before I start buying, and I give a 5-minute warning on X. So if you want to follow me on X, just use hashtag AJSLV trades and you'll follow along with me on X. But here we have a cup and handle, and we are right at the breakout point of the brim of the cup. So I have a longer term target on silver up there around 45 to 50. It's been getting a lot of press along with gold. If you look at GLD, this is the ETF that tracks the gold futures markets. You could see what happened when the cup and handle broke out here. You see that? This is how you read it. You take, there's the cup, here's the handle. When the handle or the brim or the rim of the cup is resistance, you take the depth of the cup, attach that to the breakout point, and that's how you draw your target prices. So I still have a target on gold at $3,000 an ounce. We're very, very close to that. So I'll let everyone know when we finally hit that target. And then I would expect a little bit of a pullback in the precious metals markets. I'm still very bullish in the miners. I'm still bullish on oil. If you're a member, you already know that. And if you want to be a member, at least free member for 15 days, we have no obligation, no credit card, none of that sales garbage that I call it. We don't have any tricks that we play. If you want to come on board, free membership, and you cancel at the end or renew at the end, totally up to you. And we keep it absolutely free because I want people to know how we operate and how we're making money. Speaking of which, I want to show you something, and I'll wrap it up with this. This is the February expiration so far. What is this? These are the credits that we've been taking in on this month's rollout. Now, each one of these credits here, you have to multiply that by 100 per option contract. Let me just say that in a different way. You see down below where it says $67.02? If you multiply that by 100, that is the amount of credits that our option traders have taken in had they taken a position in each one of these individual positions. Multiply that by 100, that's $6,700 in rollouts alone had you just taken one position in each one of these spreads. Now, obviously, if you're trading 10 of these, this is going to be $67,000 that you would have taken this month alone. And what we do with this money is we use it to pay down the cost basis of other positions we hold, especially new positions. We could shave off $20 of that $67 and go start a new position, maybe buy some puts in PLTR. Go take a look at what happened with PLTR today. Had you done that, you would have made a fortune in one day. So that is what we're looking at. If you're interested, again, come on board. Tonight we have the rapid fire from 6 to 7. I'll go over 50 stocks in that hour, establishing price targets on each one of those ticker symbols. And we have a lot of fun. So thank you so much for joining. Stay tuned. I'll be back on Friday for the weekly market report. Have a good rest of the week. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.